Hey, and welcome back to Financial Reactions. Today we're going to take a look at the dividend tracker. And before we get into that, let's take a look at the markets overall. SpaceX, in the comments down there, while you're liking and subscribing, go ahead and type a yes or a no. Did you get in on the IPO, or did you buy any on Friday? That's right, it didn't open till Friday. I did. I had a couple, and I sold them for a slight profit. I just playing with it to see what would happen. So let me know how you did, if you bought any, if you're holding, and what you're doing with them. Okay, S&P. Let's see how we did for S&P for the last month. So you can see we are back up off the bottom. We got down to 72.63 and it's back up to 74.31. So the next NASDAQ has had a slight rebound. The Dow over the last month is taking its time, but it had dropped and now it's back up also. So if it ever loads, oh, that's the day. Okay, as you can see, we had a drop back here and then it's recovered, appears to have covered a little more than the NASDAQ. So that's good for the Dow. And then, I'm sorry, the S&P. And then for the NASDAQ, same thing. It had dropped a little more and it had recovered a slight amount. So let's get into the dividend tracker and see where we're at. Overall, you can see we're down 58,000 on the portfolio overall. And on this one, I'm going to do Dividend Aristocrats, index funds, monthly dividends, and monthly quarterlies. So let's start with Dividend Aristocrats. And these have done fairly well. We're up 8,000 on the group. And hit portfolio. So as you can see, the portfolio had a nice little jump here over the last week or so. Even though the market has had the little bump down here, it has recovered nicely, and we are above where we started. Don't forget, we started here in March. So we started about here, right there. So we are above our starting point, so that's good, because we had that immediate crash after I started this. Caterpillar is still up, not as much as it was. Its current price is $9.10. I think, what did it get up to? I think $9.50. We'll check that real quick. Yeah, $9.20. Okay, so it's just off its high a short time ago, but as you can see, it has had a nice run up over the last few months. Caterpillar pays $1.55 a quarter, which is a 0.66% yield. And as this goes up, that yield will go down because the Dividend Aristocrats don't really overdo their dividend payments. They set a steady payment and they grow at a few cents each year. So individual spikes in the price will not affect the dividend price. Ben Franklin Resources, it's up 22%. It's up from 26.22 to 32.13. The annual dividend is $1.32, which is a 4% yield. T Rowe is also a 4% yield. MO is one of the higher yields, but as you can see, its price has also gone up a little. So we've got a 5%, almost 6% yield on that one. So that one's pretty nice. Unfortunately, you're not getting the price increase. But as you can see, this year it is up from a low of 54 to currently around 70. So it is still a good investment, or has been. And by having the higher dividend yield, each time it pays a dividend, you will get more shares. And what was the dividend? $1.06. So as you can see, it's going to pay $1.06 the rest of the year, and it's predicted to go to $1.10 for the next year. If you're not familiar with Dividend Aristocrats, this is normally how they run. They run the same dividend for the year, and then they increase it year over year. And they continue to do that. And this one, Dividend Aristocrats, is 25 consecutive years. So they have been steadily paying dividends for that long. Excuse me. Index funds. This one has done pretty good. And as you can see, we've had QQQ has gone up 20%. It's from 5.99 to 7.21. This one these pay a very small dividend yield, but these are growth. These are targeted towards growth, not dividends. So anything they hold inside this portfolio that pays a dividend, they reinvest it. So your overall investment grows. This one is the smallest, and that one are both around 1%. And then the best is VNQ, which is at 354, but it's only made 5.37% gain. That is included share price increase. So in this particular group, you're looking at growth also with the small dividends, and that is completely acceptable. If you're going to get a 20% return and you do it without dividends, this would be better if you're in an account that pays taxes, because there would be much smaller tax liability on this growth since it's share price. As long as you don't sell the shares, you're good to go. Let's take a look at QQQ. I'm going to do this. I already have it logged up. We're going to go back 20 years. And we're going to compare it to the S&P over the last 20. Now let's compare it to the Dow. Be different. Last time I did S&P. Chart, $10,000 investment. And as you can see, QQQ would have beat the Dow by about a little over 2%. With drip, and without drip, it would have really crushed it. 10.34 to 6.98. So, excuse me, I have a bit of a cold. And let's see, yeah. So this has been 27 years active for QQQ. Yeah, so that's a 10% a year. So that used to be the standard. If your portfolio would grow 10% a year, that was the average. That's what you were targeting. So the fact that this is up 20% this year, 16%, and then these are all at the 10% goal until you get down to SCHD. So pretty much any of these, you're getting your 10% target. So that most of those would be decent to hold long term. Monthly dividend stocks, you can see it's down just a hair. And Apple Hospitality is the top performer. And as you can see, it's up 33%, paying 5. So that's share price from $12.15 to $16.22. We got a 13% on EFC. 1205 to 1368. Let's take a look at Apple. See, we'll compare it to the Dow. APLE. Remember, this is Apple Financial, not Apple Computers. Alrighty. Whoa. And it has underperformed considerably over time. It's 11 years old. And it has only had an annual return of 4.72%. So that's good to know that when you're back testing these, look at its historic return, because even though it's up right now, if you obviously looking back, it has not performed as well. So that's something to watch going forward. Maybe they have adjusted their holdings. It's also a REIT. So that could have been, a lot of that could have been from the housing crash, which would have 11 years ago. Yeah, they would have caught was that 2008? So if you go back and check that, that would probably be why they probably lost heavily and then recovered slowly. And none of those pay amazing dividends outside of Trin. Let's take a look at it. It's 17 cents on a 16. So that's around that 10%, 12%. And is it consistent? No, it's actually way down. It was up to 50 quarterly. Oh, Really? I did not hear that news. It looks like they have changed from quarterly to monthly, so I will have to take a look at that and double check that to make sure the dividend tracker software didn't make a mistake. But if they went to 17 cents a month, that's fine. I'm okay with that. You're still getting your 12% yield, but you're getting it every month, so you're going to accumulate shares slightly faster. Won't do any good to take a look at that since they just changed their calculations. So we won't go back and check the history on that. Let's pick another one. Anyone else? JFR, 8 cents, but it's a $7 item and it pays monthly and it looks consistent. So there is a consistent return. And let's take a look at JFR. If you're interested in this, running these numbers like this, I'll tell you about it here in a second when I go back to the other screen. It has underperformed the Dow considerably, and it's been around for 22.21 years. So that's another long-term unfortunate one. This dividend channel, it's dividendchannel.com/drip-returns-calculator. This is a free site. You can use it. Anybody can. You just go to the dividend channel and then navigate your way to the drip returns calculator. And it's kind of fun. That way you can go back. It's a free way to go do historical testing. Back to the top. And then monthly quarterlies. Look at this. We're up 5 or almost 6,000, and we're up 800 for the day. So what are these? DES, 92-cent annual dividend. It's kind of low. DNL, some of these are lower dividend yields, and they target growth. As you can see, it's been going up steadily for almost the last year. So there's nothing wrong with that. Let's do DNL over time. Maybe it's looks better over time. And no, absolutely not. This is another long-term loser. Okay, so these are unfortunate. Good thing I'm doing this so you don't have to lose it in your account. But this is why I do this. That way you can get some little bits of information to add to what you already do in your own research. What happened to FEPI? Oh, there's FEPI. It's down to 4, but it is paying a bigger return. So as you can see, it's more volatile in its price, and the dividends, it had that little dip you saw right there. As you can see, it used to pay upwards of $1, and now it's down to 22 cents. So that dividend yield will probably continue to fall as far as the percentages go over time. So let's see how FEPI has done over time. Yep. Alrighty. It is matched the Dow. So that's pretty good. It's only 2.67 years old, so that's not huge, but total return over those almost under 3 years is 57. The average return is 18, and that matches the Dow. So FEPI, that would be, even though it's only 2.67 years, it has matched the Dow. And this is with drip on the top. This is without on the bottom. So you can see without drip, it is not maintaining. But you would have received $30.52 a share in dividends. So that's not bad. Any other good ones? Let's go back. Let's take a look at something off the top. DES 2.9. That's share price appreciation. Any of them pay bigger dividends? QQQI. Let's take a peek at that one. 66 cents, 13 on the yield. And that seems in line with historical, 60 cents. Slightly over is the ballpark for that one. So that has been maintaining. And this is QQQI. And how long has this been around? This is another new one at 2.36 years. But as you can see, it is beaten the Dow. Even without drip, it has beaten the Dow. So QQQI, I would put on my personal watch list. And then you can do your own research forward. Looks like it might be something to throw a few shares at and put in your portfolio for over time. But like I said, just keep an eye on it. It's only had a little over 2 years of history. And that is it for the non-weeklies. If you have not seen it, I do a covered calls on the Thinkorswim series where I sell covered calls on a portfolio, and I use that money to come over here, and then I have purchased 20 different stocks and ETFs, and this is the portfolio. As you can see, a lot of it is down. I noticed a lot of the weeklies, even though the stock market recovered this week, a lot of these are still down from the week before when everything was dropping, so they have not recovered yet. But this will be every time I sell covered calls in the Dividend or in the Thinkorswim platform, I will come over here and I will buy shares of the first 10 and then the second 10 every week. And I will continue to do that and keep you updated how that's going. Like I said, I just got this built. I did my last entries this week. So starting next week, we will start adding to our baseline. All right, I'm going to end it here. Hey, thanks for joining me. If you haven't already, like and subscribe. And don't forget in the comments to let me know if you are in on SpaceX and what you think of it. All right, guys. Thank you.